business desk at this hour, we are turning our attention to the anticipated outcomes of the Monetary Policy Committee's third meeting of this year. Now, the MPC has been on a repo rate hiking cycle since late last year, and it is expected to be no different this time around. That's as inflation remains above the Reserve Bank's 3 to 6% target range, despite dropping to 7.6% in August. The central bank governor is this afternoon expected to announce an increase from the current 5.5% level in the repo rate. Economist Elize Kruger joins us now to expand on this discussion. Thank you once again for your time, Elize. The market is expecting at least 75 bips. Are we correct in anticipating that figure, as we saw from the U.S. just last night?
Yes, unfortunately, I do believe that we might see that today, the 75 basis point, hike. In my heart, I wanted the SARB to look at, the pressure that this economy is already experiencing, given load shedding, the high cost of living, already what has been done on interest rates. So I think there's a lot of pressure, and this will be on top of that pile of pressures. But, as you mentioned, inflation is still, above the target band. And Reserve Bank, is on record to say that they will fight inflation until we are back into the target band and closer to the midpoint. So yes, although I do believe that the 50 basis point hike could also have been good today, and it's actually been my view that I think that they could maybe just drop the increment a bit. The reason being that we are starting to see the headline inflation cycle turning. You mentioned yesterday 7.6, that was slightly below the 7.8 of July, and I do think we will be around about 6.7, 6.6 by end of this year. So the cycle has turned, similar to what we've seen globally. But the levels are still uncomfortably high. So therefore, there will be a hike. I think that the deliberations should be around 50 versus 75 as opposed to 100, because I think, this economy has been struggling, and growth-wise and, prospects for employment and all of that, is still under a huge, amount of pressure. So the bank must look at that as well.
And I'd like us to go deeper into the pressure that you reference, Elize, because yet another interest rate hike is, of course, going to be a burden on the South African consumer servicing debt. But at the same time, what choice or playing ground does the Reserve Bank have? Because if maybe they do decide to be far more hawkish than they are expected and go towards a 100 basis point increase, as one member had wanted in the previous meeting, they would still be well within their mandate.
Absolutely. I think there's a process of normalization that's also busy taking place. I mean, you'll recall that in COVID period, the bank dropped interest rates by 300 basis points. So that was quite a aggressive, stimulation for the economy at that time when we were heading into recession. So now they are busy reversing that. So one cannot fault them on reversing, as well as the fact that, in the globe we are seeing global interest rates rising quite aggressively. I mean, last night's Fed increase was the third 75 basis point hike. And there were signals last night that they're going to continue on quite an aggressive stance, almost front-loading the interest rate hikes to get the desired, sort of constraining impact on the economy. I think what makes it a bit difficult for us in South Africa is our economic growth has already been weak. We are not quite in the same circumstances than the US. But if we do not hike our rate, almost aligned with what's happening globally, and the US is in a way our benchmark, then we could see our rand exchange rate even taking a bigger knock, given that capital will flow to the developed economies that's less risky and that also now offer higher interest rates. So, from that point of view, the SARB is a bit in the corner, meaning if they do not hike, aligned with global interest rate cycle, we could see the rand plunging, and that's also inflationary from our point of view. So I think, while economic growth is low in South Africa, and that's, sort of makes the situation even more difficult for them to hike, on the other hand, they could also not ignore what's happening globally.
I like that you reference the aggression at which the U.S. Federal Reserve has been hiking rates, because here in South Africa, the Reserve Bank has come out quite often to indicate that they are still at a moderate level of monetary policy adjustment, and it's still quite accommodative to the South African economic landscape. And I think where I want us to go in this last question, Elize, is the debate around what more the Reserve Bank could do under its current mandate, or whether there should even be questions around an expanded mandate for the Reserve Bank to just bridge that gap between the lived experience of a South African economy under pressure as well as the consumer, in line with the mandate of the Reserve Bank, which of course is monetary policy.
Yes, it's basically price stability, but also financial stability. You know, those two pillars are basically what the Reserve Bank's mandate is. Now, I do agree with our governor's very strong views about it, that now high inflation is bad for the economy as it is. So if you do, for instance, get a bit more slack on addressing inflation, it will be negative for the overall economy and for households, because your purchasing power will just be eroded further and further. So from that point of view, they are definitely on a prudent path with their mandate. It's just a matter of, it's almost like short-term pain for long-term gain. While where we are now, the economy is buckling under a lot of pressure, and now this is on top of that. But unfortunately, I think that is what we're going to see, and I don't think we could fault the Reserve Bank in doing that. For the rest of it, the other monetary policy tools, I would say, to tweak here and there on the financial sector's requirements and so on, all of that plays a role. But, the main tool they have, and it's quite a blunt tool, remains interest rates.
Thank you, as always, for your insights. Elize Kruger is an independent economist talking to us about what's expected later today when the Reserve Bank policy comes out in terms of a decision on interest rates.